Okay, let's take a look. Alright, we had CPI come out about an hour ago. Everything is in line with expectation, besides the CPI year over year, which is down just a little bit by 0.1%. But overall, looking at the scenarios that we had mapped out yesterday in our market update, everything is in line, textbook style, everything that we're really expecting. So now that the market has opened up, let's take a look at the plan that we had made last night, how it lines up with that, and basically what do you do now at the open. So let's start off from a quick technical analysis, and then we'll take a look at what the exact core CPI inputs are, what's going on there. But in terms of the data points, everything looks pretty much in line. You got 54,300, top wick rejection from this week. Come down to the daily time frame, still sitting into this daily consolidation, which is your 53,750. And then when I drop down to lower time frames, I know to watch out for this area right here. Drop down to the 4 hour, still sitting in that consolidation. So we're going to wait for either price to break below the 53,750 or above the 54,000 area, and then a continuation back up. The daily was consolidating here. The 4 hour is also consolidating. We might get a potential move later today, but we also have earnings that will be coming out. Cisco after market close, which is a Dow component. So we're expecting movements there as well. So we're just going to set this. We're not looking for a trade in the middle of this range here. Let's come over to NASDAQ. With NASDAQ, you got the top wick rejection on the weekly time frame. 29,900. You can do the 30,000 level too. Same thing. Come over to the daily time frame. You have consolidation going on, but we have a bit of a wider range here. You have about 500 points. 29,400. Drop down to the 4 hour time frame. We just rejected right up top there. So essentially what we're looking for is a rejection from up top and then a continuation down for any sell opportunities. On the hourly time frame, we just got a hard rejection. But the new stock exchange just opened up. New York Stock Exchange just opened up about 3-4 minutes ago. So we're still going to give it at least the 5-minute, 10-minute candle closures and then look for our trade in either direction. So for a sell, I would want price to continue breaking its own low. Let's extend this out. Break its own 30-minute low, continuation down, fill in that wick from right when CPI basically came out. 123-point move. If price just gives me a rejection here and then continues back up, then you have your buys sitting above 29,900. Drop down to the 15. So here's the bit of a pullback. The reason why we're also waiting right now and not jumping in immediately even after a rejection is because this could very easily just turn into a bottom wick and then a flip back up bullish. So that's the reason why we're going to look at basically what's going on with core CPI. But in terms of the data points, everything is in line. Small caps are going to be the winners here today if we do end up seeing exactly what we want to see in terms of core CPI inputs. Essentially what we're looking for here is, do we have enough confirmation that we're going to look at rate holds going into September's meeting? And so that's what the initial optimism here is for, because everything came in line with expectation. Drop down to the daily, and currently we are breaking past the daily weekly resistance area. Price has been consolidating below this level for multiple weeks now. So my 15-minute break at a level like this is not enough confirmation that there's going to be a continuation. What I want to see here instead is an hourly candle closure above this area, 30-minute candle closure above that area, and then a continuation back up bullish. So even on a 30-minute, you got a massive bottom wick rejection. You had a gap up when the market opened up. So a bottom wick rejection, and then now a flip back up. So I want to see 30-minute candle closure just for the small caps. And then after that, we have big momentum to the upside that we can continue catching. No one's trading currencies here still?
Not at the moment.
Okay. 4442.2. Top break rejection from the current weekly candle. And then support area, previous resistance on daily. 4334.8. Drop down to the 4-hour time frame. Same thing, you're getting rejection from up top there. If we're going to look for sells on gold, you would want price to break its own 4-hour low and then a continuation down, so you can take it right into this consolidation support. We can just get a bottom wick rejection here and also flip back up. If that happens, then we come back up to target these next previous highs right here at 45.37. Drop down to the hourly. This is when CPI came out with a bottom wick rejection, flip back up, and here's a new hourly candle. 30-minute, and here's the 15. So for any sells, we wait for price to break below 44.08. For any buy opportunities, I want to see a support formation and then a continuation back up closer to 44.24. Looking at silver, you've got your top break rejection from this week, 66.92. Drop down to the daily, and then here I see a support level right here in consolidation resistance. So that is what I'm going to map out if price reverses back down, breaking its own daily low. Come down to the 4-hour time frame. You got a rejection from up top there. Price is starting to pull back down. So what you can do is just create a zone below the current daily low, drop down to the 4-hour time frame. So price needs to break below this. That means that the daily candle is also going to be bearish. Drop down to the 1-hour time frame. You can catch a move before you even tap into that area if price can continue breaking its own low. So this is going to be your initial trade to the downside, and then you scale in with an additional 1% for the full 2% position down here. Until then, just this movement here would be more of a corrective move on the 4-hour time frame. All right, so that is what we have all across our assets. So now let's go ahead and take a look at what is happening with core CPI. All right, we had core CPI rising 0.2% from a month earlier, increased 2.5% from a year earlier, matching the slowest pace since March 2021. Energy and gasoline prices fell for a second month, while grocery prices fell for the first time since March. So the point of looking at core CPI was to see if inflation, irrespective of whatever's happening with oil, if inflation is trickling into other parts of the economy. If it was, then that was true inflation, and that would have brought rate hike conversations right back onto the table. Everything so far seems to be in line with expectations. Right. Anything else here? So still, same exact percentages as yesterday from the market update. Roughly 50% chance of a move after a tame reading of US inflation. We're going to take a look at the 2-year yield right now too, but it seems like pretty much kept pushing back up. So you have 4 minutes left for your 15-minute candle closure. You're starting to get nice pullbacks here. Just continue to wait for the 15-minute, and then you have your potential setup. Now looking at the 2-year yields, these are the most sensitive to rate expectations. We had a pushback down, and then the last hourly candle, right when the stock exchange opened up, you're starting to see that the 2 years starting to push back up bullish here. So this is a good sign. This is the market still basically saying that I'm only expecting it's going to be a coin flip of 50% chance of a potential rate hike going into September's meeting. So the inline CPI likely removes the September hike, but it doesn't open the door for any cuts. The Fed is basically going to stay on hold. Rates stay higher for longer. The next key thing here that the market's going to be watching out for is going to be core PCE when that comes out next, which is going to happen by the end of this month, before the next CPI comes out. And then also a potential hike expectation in October has now reduced down to 60% from roughly 75% a day earlier. And then the Fed's next move is fully priced in for December. So PCE is the next major data point that we're going to be watching towards. CPI release and labor market reporting before making decision on whether additional tightening is required. Perfect. So no upside shock in the market, no downside surprise either. Now it just comes purely down to what is the market sentiment and how is the market going to be positioning going into the next labor market and inflation reports. Let's continue down here. So this print removes the entire tail risk. It doesn't remove the debate though. So what that basically means is that the hot CPI nightmare, the one that would have forced a September hike, the one that all the institutions were hedging and pre-positioning for up until yesterday, that's off the table now. So it was not soft enough to kill the hike entirely, but the September hike odds are still sitting around 50%, because the headlines at that 3.4 level is still well above the Fed's 2% inflation target. And oil is still elevated. We have headlines here, and we already know that we're not going to be reacting entirely off of headlines, but reading in between the lines where oil continues to push back up bullish. So that is going to be another factor that we're going to continue watching. Oil now pushing back above the 80 marks and sitting right between that 82 to 84.5, which was the last peak that I had. So the market now basically got a bit of a relief. We're starting to see some pullbacks. Same thing, this is the reason why we wait for the 15-minute candle closure with NASDAQ, where you had that bottom wick and price starting to pull back. You have about 40 seconds left for this 15-minute candle closure. So the market ended up getting a bit of a relief here, but not a full resolution. So the Fed still stays on hold, most likely in September, but rates stay higher for longer, and the door for those hikes, it's still not closed here. So we have a full risk-on sentiment that's going on right now. Tech-led, anti-hike reaction, not a rotation into defensives. So NASDAQ futures are up about 1%. Up until yesterday, that was the weakest index that we had. S&P 500 is up almost 0.5%, 45% right now. Small caps, a bit more than half. Gold pushing back up bullish again. Got really nice momentum there. Yields are down, as we just saw. So NASDAQ is essentially leading. Then we have Dow after that, that's lagging. And then you have gold that keeps pushing the bonds out there a bit. For Dow, we have our Cisco earnings that will be coming out. So a clean anti-hike risk-on reaction. So this is the moves that we were waiting for. Now we're just waiting for price action to align with that, and we're good. Now, the first thing is that usually on a day like this, when you've been sitting on your hands the entire week, kind of just preparing for a move, the first mistake that a lot of people will make is chasing the gap or chasing the move. So if you look at NASDAQ, let's say on a short-term basis, it's already stretched out from when CPI was released to the upside. We already had a lot of that pre-positioning all of yesterday into Asian session as price just kept pushing. Check the 1 hour time frame too. This was a reaction right when the New York session closed yesterday. So we're already quite stretched out to the upside here. So that's a big movement. That's the first mistake, right? And it's already kind of, so to speak, extended out on the buyer side. What you need here is some sort of consolidation or a pullback, let's say a rejection down here, and then a continuation back up bullish from that. So this is still a quick move that you can catch to the downside. But the main point, the reason why we're waiting for candle closures is because if you have a candle closure below this 4 hour consolidation that we had mapped out, and on the even on the daily time frame, same thing, and then a continuation down, that gives us enough confirmation that the bare minimum, the move is going to come down here for closer to, let's say, about 100 points or so. If you don't have candle closures down here, all of this is more of liquidity grabs, given that you have consolidation that's sitting right below the zone, and then a continuation back up. Like we said, it's already a risk on sentiment. So a risk on sentiment with the bearish NASDAQ usually does not align for bigger moves. It's only for quick scalps. That's it. You have 13 minutes for a new hourly. So even with gold, same thing. You got a support formation. Trying to see if we can get actual support formations and a continuation back up bullish. Or if this is just going to be one of those situations where, gold consolidates a little bit until the shift from risk on, give dollars more, or the gold is more like a hedging asset at the moment. The shift moves back to the US dollar being more of a safe haven asset due to the war. So when you get a gap up on a relief print, more of the amateur move here is to just buy and just jump in. But rather you have to wait for that pullback, which was this move right here. Wait for the support formation. You still have about 2 minutes left for this 5-minute candle closure. And we're waiting for a full support formation here. So in the 2 minutes, if we can get a candle closure here, you can still enter those buys to the upside. But you just need a bit of a bottom wick here, because even if you try to enter right now, your stop loss is going to be all the way down here. When you have already identified that this is a very strong previous resistance off of the daily time frame and the 4 hour time frame, then I want candles to close above and give me wick rejections above that zone after grabbing that liquidity off of 1, 2, and 3 candles at this point. And if you get an entire push up top there, then same thing. You just wait for the 29,900 to be broken. But now you're just waiting for your full confirmation before jumping in. So the plan from last night is it holds exactly the same. On NASDAQ, we're not chasing these bigger moves. You want the fade back down and then a continuation right back up. That prior high that now is going to become your support. And then you let, the hourly candle in this case, that's going to close in about 11 minutes. You'll wait for that candle closure and then a continuation back up. Even if you look at the institutional supply demand zones that we usually use, price is now approaching into that 7, almost 30 area or so, even if you go back up to the 4 hour time frame. So that 730 area that we just saw, that was a resistance on the hourly time frame. We're just letting price clear above that because we know that the next major sells are sitting at 770 or 740 area up top here. So we're waiting for that, and then you have that clean move that you can still take to the upside. So drop back down to the hourly. Just wait for that clear, and then a continuation back up. If not, you still have this entire zone. Just wait for a reaction. So basically the point is that you're just waiting for price to reach into one of the zones, and then you have your clean trades. And the second mistake that people would make here is that the print here didn't really resolve anything. It just removed one leg, which was that rate hike narrative. So it just removed the worst branch here that could have been the scenario for the market. If you had high CPI, this would have been the worst combination, while oil is still elevated, and then you're potentially having to increase interest rates just to come back to conversations of, are you going to have to decrease interest rates later to really boost up that economic activity? Oil is still the wild card that's sitting underneath all of this. It's still pushing back up bullish. So 1, 2, 3, 4, 6 day still sitting at an elevated level. And it's because that the Hormuz situation is not just unresolved, it actually got worse overnight. The article that we had just pulled up, Iran was taking much more aggressive actions towards the US as the talks are frozen. So Iran restructured its military to an offensive doctrine, so the stagflation risk that we have been hedging, it didn't go away this morning. It's not dead, it's just dormant. So if oil keeps climbing and you start to see that the longer term bonds continue to fade, yields creep back up intraday, then you're going to watch for equities to fade as well. So that's the risk that we're still playing with here. Alright, so even after that nice push, even if you drop down to the 5, you got a nice push here. And then the new 5 started forming. Look how further down we're coming back. Pulling back down, no top wick. The best trade opportunity, if small caps can hold, is going to be with Russell as price continues to push back up. So this is the main resistance that we have been playing with for multiple weeks at this point. Daily time frame has also been consolidating right below that area. So the reason why this is going to be the best trade is because small caps are the single biggest beneficiaries of a Fed on hold outcome, because they're the most rate sensitive and they carry the most floating debt, and a tame CPI that takes the hike pressure off is exactly going to be their catalyst for that momentum. Now, same thing that we're talking about with NASDAQ, you don't chase the initial upside. You wait for a bit of a pullback and then you wait for the continuation. And the third thing is that just from the data points that we have been following, remember the whole setup where the retail side has been bearish on small caps for 3 weeks, but the institutions have been hedging against it and positioning for the upside. So that clean and hold above that resistance is going to open a path towards the next major level for the institutions. So these are all the buys that have been coming in from the institutional side. And this is the move that the retail side has pretty much been non-existent in, and they have been actually selling into. Yeah, so IWM is the biggest structural winner from a Fed on hold outcome. Retail hates it. Institutions are hedged against it. So the highest conviction CPI trade if we're bullish. So now let's take a look at what it has done. We got a nice push on the 4-hour. Right when CPI came out, New York Stock Exchange, we're getting that initial pullback. This is the level that we're watching out for here now, where price created its own bottom wick. Same thing on the 30, right at the stock exchange. Now, 15 minutes after the stock exchange, you have a bottom wick, waiting for an established support and then a continuation back up. You still don't have a trade here. Your trade is still going to be above this area. The main thing is that now you're creating those bottom wicks and then the continuation back up that you need. So once price breaks past this area, that's where you're going to have the institutional puts that activate, and then you get that sharp flush. And you have better trades to the downside above this zone or above that area, nothing in between. So while we're waiting on that, another interesting thing that I want to pull up here, nothing on either of these just yet, was Bank of America putting in $250 billion $250 billion initiative to invest in critical infrastructure across the U.S. over the next year. So for 2 weeks, we've been looking at data where smart money is rotating out of crowded mega cap tech and into the physical layer, power, the grid, the infrastructure. So this morning, the biggest banks in the country are making it official. Bank of America announcing $250 billion into infrastructure, data centers, power generation, energy storage, transmission, critical minerals. Morgan Stanley has also announced $1.5 trillion package. That's on top of JP Morgan's $1.5 trillion. So that's the exact theme, the physical economy of the AI build out that, we watched 13F Flows telegraph about 2 weeks ago when BlackRock and Ontario teachers, all of them were quietly loading up on power and pipelines. So now this is pretty much front page news, trillions of dollars stated by Bank Strategy. So we were able to catch all of that through our data points here, through Transpider, weeks in advance. So we already knew what kind of movements were coming. All right, you got about 3 minutes left for the hourly candle closure. And then also we have Citadel updates. Citadel's flow desk set this morning to prepare for a re-leveraging. So the big deleveraging from late July is done. And now we have buyers that are set to reload. There's over $1 trillion in buybacks that are authorized at the moment. So a real tailwind under this market. It supports the relief rally that we're talking about, but hold it against what we already know, that the retail side just flipped maximum bullish, plus the momentum that we're starting to see on NASDAQ and record call volume last week. So you've got real mechanical buying support that's coming and a crowded euphoric retail position at the same time. So that combination can push higher, but it's the kind of setup that runs hot and then you'll see snap movements, so quick whipsaws. So this is exactly why we're staying long the rotation, but keeping our hedging, our protection, our risk management on the way that the institution side have it on, as we followed in the market updates yesterday. So today for Dow very specifically, we're going to watch Cisco after the close. It's a major Dow component and the enterprise AI networking read. And then yesterday we already saw Supermicro and CoreWeave already having amazing earnings. So a strong Cisco is going to carry that AI infrastructure momentum into tomorrow. And if there's a miss, then you're going to see a fade on NASDAQ overnight. Any questions so far?
Nope, no questions for me.
Cool. All right, we have about a minute left for this hourly candle closure. So try to break above 29,900. Made a massive bottom wick rejection as well. Still the reason why we're not jumping in immediately. Still waiting for US 30. Same thing with small caps. All right, let's take a look at what else we have. So the rotation continues out of high beta SMI's growth into quality industrials, healthcare, utilities, select value. And then we have heavy insider selling across growth tech, biotech, but majority seem to be pre-planned. Gold is still on the table, so still long on gold. And gold is mainly being used as a hedging asset against these uncertainties towards the economic data points. And then with Dow, it seems like we have better directional swing trades that are setting up. We've got upgrades on some stocks that are part of Dow already. And Cisco is part of NASDAQ and Dow. Alright, we got the new hourly candle. So the previous one still closed above the zone here. When you drop down to lower time frames, we got a 15-minute bullish candle closure, support formation. We're waiting for this 15 to flip, so you're going to give it the first 5 minutes. So wait for 3 more minutes. The previous 5 closed with a nice bottom wick rejection. This one, I'm just looking for a bottom wick, flip back up, close bullish. As long as candles are closing above this area, the buy setups are still very much valid. But as soon as we start seeing candle closures below this area and continuation down, then at the bare minimum, you're just looking for a move to come back down for this entire wick fill. For US 30, nothing yet, but we did get close to the support zone that's being shared by multiple time frames. So if you see a support formation here, very clearly, if you can see candles closing above this zone and a continuation back up, then you have this entire trade for about 170 to 80 points that you can catch to the upside. The main thing is being able to get a 15-minute bullish candle closure, and next candle takes you to the upside. Small caps came back down, closed bearish below the zone here with a nice top wick rejection. And here's a new hourly candle creating a top wick. Let it break its own low, and you have your potential sells with small caps. And same thing, you're targeting 3,000, almost 30 area right down here as your first target. So the reason why we're waiting for its low to be broken and we're waiting for a little bit more push is because this candle could very easily just create a bottom wick and then flip right back up bullish. So look at the 4-hour setup as well. Nothing on gold, nothing on silver. The key levels for oil still hold, which is your 80, 85, and 90. Every time price rejects one of these levels or pushes past them, you still have your good trading opportunities. So 80 is a level where when the ceasefire was violated, price was hanging below that, and then you start to see a continuation back up, even based off of weekly time frames. It's a very strong level where you have these rejections here to the left, and then price continued to push back up. After that, came back, rejected right into 85. We had some conversation around potential peace deal, potential talks, negotiations again, things like that, where they paused military strikes from both ends. And then now we have price creeping right back up above 80, closer to 85. That 85 to 90 move is where you see more strikes, where you see that there's no conversation going on. Even the headlines can't even give you like any sort of optimistic sentiment. So that's where that movement comes in. From 90 to 95 to 100, it's peak war, peak attacks that are going on, a lot of casualties and things like that. So with small caps, you got your alert hit, but what I was just talking about, where you're waiting for price to continue breaking its own low, it can just create a bottom wick, flip back up. This is what I mean here. So you got your 5-minute candle closure. 5-minute is just for the volume. 5-minute, it's not for the direction, it's not for the entry. 5-minute just tells me that if I were to take an entry right now, does this candle have enough volume that it can continue moving? Because I don't want to take an entry on a candle that's going to consolidate for the next 15, 20, 30 minutes, right? And so here we're getting a push back up on the 5-minute. You got the previous one barely Not as much, I wouldn't say barely, but not as much bearish volume to the downside to continue pushing. Same thing with NASDAQ. You got to push back down, but not enough just to continue that momentum to the downside. Instead, the next candle's trying to pull you right back up. So we'll give it this 15-minute candle closure. We're going to set our alerts and then just come back whenever the alerts hit. Instead of just sitting here for about an hour, if price is just on the lower time frames, you can very clearly see that it's consolidation that's going on. So instead of sitting here and watching the consolidation, we can just wait for the alerts to hit. Let's see if there has been any shift after the open. As soon as XRP drops below $1, I'm going to be buying in some more. There's a very high chance that US 30 is probably just going to stay in this consolidation until the earnings after the market close. Alright, 30 seconds left for this 5. You're starting to get a push here for small caps as well. That was a big topic rejection for where I would like to keep my entry. So if the next 5 can give me a top wick and flip and continue pushing, you still have a valid trade to come all the way down here. So there's that. NASDAQ pulls right back up above 29,800. This does not mean jump into a buy immediately. You're still waiting for a bottom wick. That bottom wick tells you where to place your stop. It also gives you that liquidity bottom wick that you need on that bullish candle, and then a continuation back up bullish. US 30 tried to break below support, couldn't really do that much. Alright, cool. So we're in the final 5 minutes. We're going to set our alerts now that pretty much everything besides Russell is consolidating. Alright, so let's start off with US 30. What are we going to do? We still have our alerts that are set. I'm going to just bring that up a little bit more. 53,710 for sells or above the 54,000 area for buys. Price is most likely going to be consolidating. If you really want to catch a move on US 30 for a potential scalp, then you have 53,800 level mapped out. The reason why I'm still waiting is because we already very clearly just saw it from our data points that US 30 is going to be more of your potential swing trade opportunity. There's a lot better swings that are setting up here. So that's what I'm going to watch for. NASDAQ has really good scalping opportunity. So now you have the hourly candle that created a bottom wick into those previous consolidation areas, flipping back up, pushing bullish. You have 3 minutes left for this 15-minute candle closure. The reason why I'm not jumping into buys is because that's a very wide stop loss. So I'd like to keep a tight stop loss. I think backwards. I think about my stop loss first and then where my entry would be. So in this case, if this candle closes like this in the next 2-3 minutes, you get a bottom wick rejection. As long as that bottom wick is not breaking below the zone, you still have nice buy opportunities to the upside that you can catch. But when you drop down to the 5-minute time frame, all of this is pure consolidation. So that's why I'm putting a heavier emphasis on the 30-minute and then also watching what's happening with the 1-hour candle, because if those continue in the same direction, then I know that we still have enough buyers to continue pushing, and the entry is going to come from the 15-minute. So the 15-minute has to create a bottom wick and then flip back up. If this 15 is weak or the next 15 also starts breaking below the zone, I don't have a trade. Small caps is playing out. So you're all solid there. Coming back down into first target area, second target area down here. And then you want to be very careful here. Make sure that it's not just becoming a bottom wick and then flipping back up. But if price extends below this, then you just target the previous support areas down here. Nothing on gold. So I'm going to wait for 44.42 to be broken for those continuous buy opportunities. We already saw that institutions are still buying up gold, so nothing's really going to change there. For any sell opportunities, it has to be below this previous support zone that we have created. So that's pretty much it. Any questions? All good?
All good. Thank you very much, Sherman.